Good morning. It is Monday, August 19th. If you've been waiting for me on YouTube Live, I just had a nightmare of a morning. Again, it's just, oh, what a freaking, it's Monday. It's Monday. It's Monday. And I want to start out with pointing out that there's not going to be a lot of scans. There's not a ton of entries in the market today because last week was so damn good. We had the bounce back last week from the previous week being bad. But I want to point out, and I pointed it out in the newsletter this weekend, was this the weekly bounce? Is it all clear to get back on? What mistakes I've made and what I'm avoiding? Again, this was more probably a personal email newsletter than it was anything else. I included all the names that in each account I included in the newsletter. All of the names that I've traded this year in each account, okay? All of the mistakes that I made, blah, blah, blah. One of the things that I want to point out, and that I said, and I don't know if I highlighted it enough, is that every single index, every single one, QQQ, SPY, VOO, whichever one you want, all of them, IWM, all of them have a weak September, okay? Weak September. So while yet last week felt really, really good, look at September for 25 years on the Qs. It's the weakest month, okay? And I want to point this out because I'm going to take you to September of last year. Let's go VOO. This is part of what you can do in Trendspider is you can take a look. 38% for the last 14 years. Okay? It's the worst month. So are you loading up on everything this month? I would say no. We'll look at IWM. IWM for the last 24 years. September is the worst month. Okay, it doesn't mean that we won't go up. What this means is 42% of the time the market is up. That's less than 50%. So you don't have a huge chance. Look at October, look at November, look at December. We're heading into those good months. But September, you want to be a little bit cautious. Yes, I added Amazon. Yes, I added the Qs. Yes, I added more NVDA. Yes, I added a few other things. But the fact is that September on all these indexes, I just went over 3. Here's the 4th one. This is DIA. This is the Dow Jones. And what does September look like for the last 25 years? 40%. Okay? It's not very hopeful, but you've got a rate cut coming, which if you believe a rate cut is good, again, are you in the good camp that a rate cut is good? Or are we in that they need to do a rate cut because the consumer is weakening? Again, which camp are you in? I went over that in the newsletter. So you want to take a look at this stuff because this right here, see this? This is September 13th of 2022, the 5th largest daily point loss in S&P history. This was 2 years ago. And we're on a bull market, just so you're aware. We are still in that bull market. If you go and you look at the weekly chart, you go and look at the monthly chart, we're still in that bull market. The 50-day, the 200, everything's moving up. Yes, we use that 450 as support on Qs, but we are still extended on the MACD on the weekly. We are still extended on the RSI. We are still declining in volume. So I want to point out that I'm not going balls deep on this one. I am just adding to some positions that I don't mind holding long term. Okay? These aren't short-term trades. You might lose 10, 15, 20% in the month of September. Even if I do lose that, I can always trade in and out. The point of this weekend's newsletter was, hey, what mistakes have I made? And am I going to make them in the future? Probably. Your boy's just dumb. That's it. So We're going to start this out with a little commercial.
Nothing, B. Just watching the game.
What up, B?
Having a bud.
What up,
What's up with you?
Having a bud?
Nothing.
Nothing.
Watching the game,
For
having a bud.
those of you that don't know,
True.
it was popular to talk on the phone and call your friends.
What's up? Yo, what's up?
That's what we're doing. That's what we're doing. Throwing it back here. Now, Tom Lee, is it transitory or seasonal? We always know the summer is tough. Fundstrat reflects on the markets. Volatility over the past couple of weeks assuring investors that turbulence is seasonal phenomenon. This is the guy that said IWM was going to be up 15%. So I like that one. You know, it's a good clip if you want. The 20 biggest VIX crashes and how the S&P fared, that's an awful lot of green. You can find this in the newsletter as well if you'd like. Steve Kress from Seeking Alpha is having a webinar. I'll post it in the newsletter, a link for it. You can. It's about the Mag 7. You can sign up for it. Now, Goldman Sachs, earlier, I think it was Friday or something, lowers the U.S. recession risk on strong economic data. They went from 25% chance that we're going to have a recession to 20%. Again, 20%, I'm still not going full in deep with a 20% chance. I'm 90% invested, not 95. I will get to 95% invested, but I'm just going to do it sparingly. Over the month of September, I'm patient. Again, remember, the past few times I said patience is the key. I'm going to be patient. Here's the biggest movers of the day. Zim, they had a huge dividend. Fubo, we'll go over Fubo a little bit. Judge blocked the Fox, Warner Brothers, Discovery, and Walt Disney merger, and Fubo just soared. It was up 16% on Friday. It's up another 16% today. Crazy. Shake Shack, AMD did a major purchase, rose over 3%, but it's pulling back. Shake Shack and other casual dining, luxury casual, Shake Shack, Sweet Greens, Dutch Brothers, they were all down 3 or 4% after Piper Sandler downgraded them. So we can take a look at those. Microsoft, I want to point this out, and this is part of patience, okay? Yes, I was invested in Microsoft this entire time. The 16 years and 11 months from 1999 to 2016. I believe I got in 1995 was my first kind of buy, but I did get in 1999. I was adding to it during this time. It was a long-term holding. I was just solid on the company. During this time, I was eating, 4-pound bags of M&Ms with Red Label fat milk while in bed playing Halo. Okay? Microsoft owned Halo. I loved this company. I didn't love Apple during this time. During this time, I was like, okay, I'll get an iPhone in like 2004, 2006. I loved Microsoft before I loved Apple. Now, it hasn't grown as much as Apple, but it could. Trendspider. They build things for you, okay? You can typically see if you're a long focused trader, this scan is for you. You can import these things into Trendspider. So what I want to do is I didn't import this. This is 36 symbols found in the NYSE based on this scanner. So this is what I do. When I send you all of the 4-hour algorithm, all of the 65-minute algorithm, all the watch lists that I have, the scanners, all of those custom things, you're just going to log in and import. Okay, this is correction deniers. This is one that Trendspider is built for you. So you can share this with your friends and you can subscribe to it. Okay, you can pull it up. Now I'm subscribed to it. Now I can look at it when I want to. Right here, it's going to pull up and it pulls up the alert up there that I'm now subscribed to it. You subscribe to Correction Denier Scanner by Trendspider. It's now available read only. So I can scan on that one. That's how you import things into Trendspider. And FYI, if you sign up for Trendspider, limited time sale today, summer flash sale. They didn't notify me, but over the weekend, they started this sale. And so it's going on just today. Enhanced, the middle version is discounted 47%. It's cheaper than the standard. So you get 10 active windows, 100 simultaneous alerts, 90 max day lifetime. Okay, 30 simultaneous trading bots. You can launch trading bots. I don't use trading bots, but this is the sale. This is the summer flash sale, up to 63% off. If you are new to technical trading, I would point out advanced service has unlimited one-on-one training. Unlimited one-on-one training for this advanced service. So if you're new, I would bump myself up, and you have it in your budget, bump it up to $82 a month. Sign up. How do you sign up and get all of my goodies, like the 4-hour algorithm, all of that stuff? This is the link tree, linktr.ee/daily stock pick. The link is down below if you can't remember that. Okay, you click on this link. It will take you to this page and you sign up. When you sign up, you go back to the link tree. You take a screenshot of your Trendspider account page, because I need to link your email up to my program. Okay, you email that to me. My email address is up here in the upper right. Okay, but you just saw how easy that was to import. Now I've got something built for me and I can scan on it. It is built for you. That is the best part. You wanted an easy dollar cost average strategy that is back tested? Enter long when the price trades at least 10% off its 20-week range high. Return 3 months, 12-week candles later over the last 10 years, okay? 124%. So the price trades at least 10% off its 20-week high, you return 3 months later. You can sell it 3 months later. Okay, that's the key. And when you want to build that strategy, you go over here to Trendspider and you can hit new strategy and you can enter in your script. And your script down here, there's a button called add a GPT custom script. Type in that text. It's as simple as that. You can find a strategy and just type in the text. That's how easy Trendspider is. Now, this is a great way to do this. 124% total return, 75% win rate, plus 5.62% average return. That's a great strategy. Make sure you're back testing your strategies. Okay, strategies that work. This is the same kind of thing. You just import this stuff. Palantir, MACD bull cross up below zero. You make 554% versus 292% buy and hold. FICO, any bullish moving average cross, 145%. They've built these for you. So you can import them directly into your strategies. Okay? That's the easy part. The hard part is finding stocks, blah, blah, blah. How do you find stocks? Well, look. Just look. Look at this. Amazon trading multiple 5-year average 25.5 times. It's trading at 13.1. I bought more Amazon. On Friday. Am I sure that this one's going to go up? No. It's up 0.22% today. I think I bought it like 175 on Friday, somewhere in that neighborhood. We've pointed out on Amazon that Jeff Bezos still has $3 billion of Amazon stock to sell. Where is he selling it? He's selling it at 200. We know that this 188 has been a historical resistance point. I don't think we're past that. We are now below it. Again, you broke through it and you held a couple of weeks above it. Jeff Bezos sold $2 billion worth. So in my mind, I added a bunch at 175. I sold some at 176. As we get up to that 188, this is a top 5 holding for me. So I can easily just trim it back at 188. And if it dips down, I'll buy more. But again, this points out that it is trading at a huge low multiple. Just historic low multiple. Airbnb, DraftKings, Ulta Beauty. We saw, I got out of Ulta Beauty. My ass got out right before a 14% upgrade. That's in my newsletter this weekend. Alibaba, they're all trading at historical multiple lows. Okay, what does multiple mean? That means price to earnings. You can go look that up on Investopedia if you want. Now, here's a great thing. Trading momentum, loving stock. Get into Tesla on a bullish MACD cross up. Exit on a MACD cross down. It makes you money over the last 5 years. Crushes buy and hold. Okay, 1,650% return with a 47% win rate. That is a great, and it's easy to build. Trendspider, it's the easiest platform to build. You don't even have to know what you're doing. Just type in MACD cross up on a daily and for the exit, MACD cross down. And it will do it for you. So I like this one. We've gotten a couple of upgrades from Seeking Alpha. The other tool that I have is Seeking Alpha Premium. And let's look at these. We got XLK, which is in the core portfolio. This one's an upgrade from hold to buy. We can look at the chart on this one. This one has been going well. Do we have an entry in the 4-hour algorithm? Yes, 204. You're pretty happy because at 204, now you're at 220. Okay, that's a 10% move in that one. You can round up. But if we go over to Seeking Alpha and we look at XLK, we can see it went from a hold to buy. Okay, hold means, you hold it. If you want to add to it on a hold, you can add to it on a hold. But look at the momentum, expenses, dividend, risk, liquidity. It's all good. And the Quant has it as a buy. You can go over here and you can look at it. Every time that it's been up to a buy, we've gone up. When it's gone to a sell here on 812, it went down, 207. At 197 was where it was a sell, but you still went up. I would argue this is a great one. This is a great ETF. Another stock that had an upgrade, Uber. Now, this one went all the way from hold to strong buy. Hold to strong buy. And the valuation is the only thing, but it's a D. And remember, as long as they grow with that PEG ratio, you are perfectly fine. PEG, non-gap forward is 0.72. It's below 1. You're perfectly fine. The growth, it's an A. They're growing 14% revenue year over year. Leverage free cash flow up 343%. Now, when you look at Uber, it's got a great chart. I don't know. Don't ask me why I sold it. I thought 70 was going to be a resistance point. You're at 72.36. I thought it was going to come up here. You very well may cover this gap up to 74. You very well may. I'm not saying that gaps don't always get filled. You've got a high MACD. Looks like it's button hooking down. Could be coming down. The RSI is at 65. It's a little bit extended. You got a couple of ratings downgrades. Netflix, they went from buy to hold. I would argue Netflix is going to get to 700. My ass is going to be on the couch on Christmas Day watching a CBS-produced Netflix, NFL games. That's what I'm going to buy. Pepsi, I just had a Pepsi the other day. This went from buy to hold. Both of these went from buy to hold. They're still in bullet. This one has a golden cross coming up. Now, Pepsi, I just had a Pepsi the other day. It's the problem is the momentum on this one. It just, from a long-term perspective, it hasn't been good. Are you going to kill it on this one? Probably not. This is one that I just hold in my portfolio because I drink a shit ton of Pepsi. I drink Pepsi. Okay, I don't like Coke. I'm in Atlanta. I don't like Coke, but I have Coke stock as well. Pepsi I've held for a very long time. 1 year, you're down 4%. 5 year, it's not a huge position in my portfolio. 5 years, I'm up 30%. It's because I drink it. That's it. So, again, those things, were in the core portfolio from Seeking Alpha. You import it. Now, import things into strategy, dollar cost average. This one too. I bought more Amazon. I like this trade. This is Josh Brown. Josh Brown, I actually like. That face right there was pretty funny. But he bought the trading desk and SG. Let's see. The trading desk I like. Okay, I'm not sure about SG, but the trading desk position I like. He bought it at a pretty extended time. That's my only issue with it. I would wait for this one to pull back a little. Now, the algorithm, it makes you 3%. You make 36% in this buy and hold. It has been on a weekly tear as far as currently right now. I will tell you the average win is 7%. So if you take this average win of 7% and you look at the entry here at 86 and you look at this, you're up 20% on that buy. Now, that's just in 10 days, okay? 10 days, you're up 20% in that one. The MACD crossing over a little bit. The RSI extremely extended at 66. I would wait to buy this. 97 has been a resistance point. You're trading at 101 right now. Doesn't mean you don't get over it. Look at this back in 2021. You got over it. Now, is this the breakout that now uses 97 as support? I would say you have to wait until you see this. Look at these first couple of weeks. It just got down below there. If this is, again, a breakout above that form of resistance, we're going to see it. So another stock idea that I saw, we're going to go over to Seeking Alpha. And if you go over here and you have Seeking Alpha Premium, you can do these find and compares, okay? Over the last couple of weeks, last week I told you PSIX, which is Power Solutions International, which Brian, I think is his name, in the private Facebook group brought up. He's been killing it on that stock. But I wanted to go over the second one because you can look at these things and you can say it's based on quant rating. Okay, those top stocks, you have to have Seeking Alpha Premium. And we're going to go over this one because I think this was an interesting one. On Wednesday, Clover Health hits 52-week high after $1 million insider purchase. That's the headline here. But let's go over and let's look at some of these valuations, growth, profitability. Again, remember the quant grades it. So it's not making money, it doesn't have a PE. But their price to sales 0.66. It's 82% below their sector. Okay, when you look at growth, their revenue growth not great, but the levered free cash flow. If they go positive on earnings, this one's going to explode. Okay, it's 82% above. It's 82%. I'm sorry, it's 919% above the sector, which is actually at 8%. They're making 82%. You go and you look at the profitability. What are they doing on gross profit margin? 15%. It's not great. Not great. Return on assets, though. You look at that asset turnover ratio, 2.16. So you look at how they're doing. Momentum, it's killed it. Momentum, I've told you before, momentum is a strong factor. So CLOV, now let's go over to Trendspider and let's look at the 4-hour algorithm to see how this one trades. And I haven't looked at this. I just saw Clover in there earlier. But this is kind of what you can do. If you're getting an itch to trade, you can use these tools to do this. Now, and you take a look at this, okay? CLOV, you make 4% in the 4-hour algorithm. Doesn't sound like great, but you know what? If you bought this 24 months ago, you're down 6.8%. Your average win is 50%. So it's got some huge wins in this. So what you can do on this 4-hour algorithm right now, you're up in 62 days. You are up 200%. Would I buy this one right now? This looks extremely extended to me. Extremely extended. You just had your earnings. You have confirmation. What I would do is I would go to the 65-minute algorithm. And I would say, you know what? I'm going to look at this one on a little shorter time frame because it is extended on a higher time frame, and we can see so far today that this one candle, this one is up 2.56%. It's got confirmation. You're extended on the 65-minute. This one you could have gotten in here at about $1.80. It's at $3.22. Okay, the 65-minute makes you 87% over 8 months. Okay. That seems like a good return. If you bought and held, you're up 184%. I would argue something like this that was a upper left to bottom right. You want to take that time frame, shrink it down, and try and trade the rebound. You're in a rebound right now. Do we have more to go? Well, I will argue that when you pull up this weekly, that you're just getting your 200-day. And I would argue that 200-day, that resistance at the 200-day is at 391. The reason why I brought this up was because I looked at the weekly chart over the weekend and I thought, if this one's just trading at $3, it might be worth putting some money in my Webull account and just looking at CLOV at a time when I can trade it. Now, maybe you want to look at something where it gets you in on a 5-minute chart and you want to trade this one on a short time frame. Well, this 5-minute algorithm gives you that. Got you in here pre-market at $2.83. $2.83. Now, we've traded this one before. I want to take this one out. So, we won't. I have to take that one out on the 4-hour. But when you take a look at this one, if you got in here at $2.83, even if you still have confirmation, you're up 15%. 15%. I'm sorry. That was on Friday. So if you got in here early today, you could have gotten it, 286, 287, somewhere in that neighborhood. So you're up. My point is, there are ways to use these tools. How do you get these tools? Well, the first one we talked about, Trendspider, that has the 4-hour algorithm, the 65-minute and the 5-minute. I give you the links to import them all. So that's the first link. The second link is for Seeking Alpha Premium. That's how you find these stocks. That's how you find ideas. It's $25 off and a free 7-day trial when you use that link, the second link in the link tree. The third link is Alpha Picks, and we'll go over some Alpha Picks. Some of the most recent one, I think CLOV might have been in there. I'm not quite sure. I don't know. But what should interest you about Alpha Picks is you get one pick on the 1st, one pick on the 15th. We just got the 15th for August. Okay, that stock pumped up a little bit right after it was given, I believe. I'm not supposed to tell you exactly what it is, but the portfolio performance is what you want to focus on. The portfolio performance since July 1st, 2022. I always tell you, rate yourself based on the S&P, the Qs, the IWM, whichever one you want, the Dow, whatever one you want. Find an index that you want to compare yourself to. This one is the S&P, 114% versus 38% on the S&P. And again, they tell you when to sell. So if you want to buy it, they also tell you when to sell. It's a great alpha pick program. And that's the third one. Your fourth one is what I talked about with CLOV. I got $1,000 that I put into Webull a couple of years ago. It's like $7,000 now. I trade QQQ in there. I trade triple leverage stuff. I don't do options. I haven't done options. I may do options at some point in time. But I like Webull. I put money in there. You can get some up to 75 free stocks when you do this. Again, my link tree is a way to support me as a creator, as a stock picker for you. And it's also a way for you to get discounts on this stuff. So there you have it. Just CLOV. I looked at that one. We'll look at it more. GM is an interesting one too, because it's 27% below what Wall Street is saying it should be trading at. So again, if you go to this top stocks, I didn't know PSIX at all. And I get scared of ones that I don't know that are small caps. PDD I do, but I don't like investing in China. Now, when you go to GM, what I found interesting about GM, and this is what Seeking Alpha Premium gives you. It gives you just a way to easily click and find things that you want. Again, look at the factor grades. A, A. But the average price target for GM on Wall Street is $57. That is 27% above where you're trading right now. That's a pretty good history right there. Okay, I like that one. I like it, and I like it a lot. Again, I found that through Seeking Alpha. Now, let's talk about, we talked about the trading desk. This is what's interesting, where prior resistance means new support. It's not, I don't find it hard to read charts. If you do find it hard to read charts, my suggestion is find one stock that's a major stock in your portfolio, okay? Learn how that stock chart moves. NVIDIA here, pretty clear to me on this daily chart. Previous all-time high, used it as resistance right there in March. We dipped down below it. Then it got up here. It gapped up. Most likely that was the earnings where it was a gap up, okay? It came right back down at the end of July. Came right back down to that point right there. Yes, it broke it, but that's a pretty good indication that if you wanted to start a position, it was a good time under 100 to start a position. Okay, even if you were adding to a position, it was a pretty good, clear sign where old resistance meets new support. We talk about that all the time. Factor that into your head. Anytime you see previous all-time highs and it's bumped up there multiple times and then it falls down below it, that is old resistance. And it will always turn into new support. If it breaks through it, then you can dollar cost average because it's old resistance. Okay? Again, old resistance meets new support, and become an expert on go today. Find out what's the top stock you're holding, okay? If it's an ETF, that's fine. Whatever it is, get a free charting program. Webull, just put $1,000 into Webull, $500, whatever you want. But get a charting program. Don't use it on your phone. Don't use it on your phone. I will say this again. Your phone is not a charting program. It can't be. It's just not big enough. Do you need a 27-inch monitor? Do you need a 35-inch curve? No. But you need something where you're able to determine moving averages, MACD, RSI, some of those indicators. You need something. Okay? But become an expert on your number one holding. And you'd be shocked at how mathematically these stock prices move. Okay, there's catalysts like earnings, like news reports, things of that sort, which makes the stock price move. But it just seems to be, and again, maybe I'm Rain Man, but it seemed very easy to me once I started focusing on one or two different stocks. AMD acquired ZT Systems. This one's huge. I mean, it bumped it up by 3%. This is big. This is big. You know, again, if AMD is going out there and buying stuff, NVIDIA, remember, they tried to buy ARM Holdings and they couldn't. And now it's worth, 100 times more than what they wanted to buy it at? Look at these kind of things. Utz brand, Celsius, Freshpet. This is what Piper Sandler is saying. Hey, there might be some M&A mergers coming into play here. None of these are buys in the Quant. None of these are buys in the Quant. But we saw last week how Kellanova, I think it was bought by Mars. And that stock just soared. So again, you want to take a look at some of these beaten down stocks that may have really good brands. And they might be worth, putting some money into for just a pop. 6 beaten down stocks by Quant rating. This is Steve Kress, who's in charge of the Quant for Seeking Alpha. He is just a master at this stuff, and he explains everything. Again, he's one of the ones that writes the Alpha Picks articles every time. He's the lead person. He's the one that makes the final call as to, this is the one that we're going with. He's got a team that proposes to him. But, he 6 beaten down stocks based on the Quant. That's a great article. Earnings summary. We talked about Zim. I want to point out that, who was it? Morgan Stanley downgraded HPQ. And they cited that last quarter was so good that the comp to this quarter is going to be tough. And so I wanted to bring that up. It's down 4%. Okay. Is this an opportunity to actually buy it? Because they do have earnings coming up. Remember, this is between Dell, HPQ, and SMCI. And so if we, remember that SMCI was brought down because of their margin. Gross profit margin is 22%. The sector in this is 49%. So HPQ, if they're reducing their prices to basically compete with Dell and compete with SMCI, they're going to get dinged on that as well. Piper Sandler downgraded them to equal weight based on lagging PC sales. Now, we can go over here to Trendspider and look at HPQ. I don't want the 5-minute. I want the 4-hour. Let's see. Yeah, pulled up the 4-hour. So we can look at HPQ because, again, SMCI has been on a tear. Today, it's down 1.8%. Dell has been on a tear. But HPQ, buy here at 33 or at 34. You got all the way up to 35. Now, the algorithm makes you 18.3%. Again, back testing. If you bought and held this one, you made 6.2%. You win 47% of the time. Your average win is 5%. The earnings are coming up right around SMCI and NVIDIA, and SMCI already reported, NVIDIA and others, August 28th. So you've got next week is a big week of earnings. This one, it popped on earnings. The last earnings, look at that weekly pop right there. This candle, this green candle, is a 10.98% candle jump. Okay? You're just resetting yourself. Now, we talked about how previous all-time highs. Take a look at this. If just looking at this chart, I can kind of see this. Take a look at this and you'll see. Look at how it popped up there. Okay? This previous all-time high, which was right here. Okay? Is that providing some resistance? Probably. Because look at it. It couldn't hold above there. Okay? It's broken down below. It's going to provide some resistance at that 35.89. Today, It's trading at 34.39. That's going to provide some resistance. Look at the Bollinger Bands. The Bollinger Bands cinched up right here. They tightened and they expanded out. Didn't know that earnings were going to come out, but it was saying, hey, we got to move somewhere because we're in this trading range. Right now, it's still wide open. Not one you want to necessarily get into. But I did think it was important to say Morgan Stanley downgraded them. Okay, and those 6 beaten down stocks. I want to point out something that Steve Burns said, and I will put this quote in the newsletter as well. Every trade is a lesson. Winning trades teach you what to repeat. Losing trades teach you what to avoid. That was the entire focus of the newsletter this weekend. It teaches you what to trade. And I said this, I found out something shocking about my SMCI position that I didn't even know. So reviewing these things actually helped me a hell of a lot. A hell of a lot. Now, earnings, we went over, I was just talking about Zim. If you didn't know, Zim was a huge, it was a huge winner way back when, I think it was like a year or two ago when shipping was a big issue. And specifically with this one, what I wanted to point out was their special dividends, okay? The special dividends on this stock, what they do is they basically give you everything that they make back in a dividend. Now, they just announced a 93-cent per share dividend. The stock was trading at $19. That's a 5% special dividend, okay? That's a 5% one-time special dividend. It is up 18% today. Their earnings were really good. Let's go and let's see how the algorithm trades on this one, because this is a super highly volatile stock. Now, the algorithm loses you 27%. Okay, it got you in at $19. It's not a bad one, but it loses you 27%. Now, what's worse is if you bought and held this one, you lost 63%. I don't like huge dividends, but as this one gets closer to its ex-dividend date, you might be able to get a little pop in this one just for that. Okay. Social requests. Mac, can you do a segment on Fubo? With the most recent partnership with Amazon today, and this was last week, they did not announce any price for the deal, so I'm trying to figure it out. Should I buy it now? So I wrote back to Mac and I said, I'll look at it Monday. I probably won't go into too much depth about the future on it, though. You'll need to do that research. It's just an overvalued hype stock in the past, so I can't imagine that I'll say anything other than trading it. And then what do you have? Literally an hour later, this news comes out. Judge blocks Disney, Warner, Fox Warner deal. Fubo spikes. Fubo is up 28% today. It was up 20%, 16, 17, somewhere in that neighborhood on Friday. This one has spiked. If for some reason that merger is not able to take place, Fubo is back in business. Do not think that this is anything other than a trade. 1 year, you're down 12%. Okay? Year to date, you are down 37%. This is nothing other than a trade. Profitability is horrible in this name. This does not mean that this stock all of a sudden becomes profitable. It doesn't mean that all of a sudden they have an NFL deal. It doesn't mean that there's anything other than a pop because they may be able to stay in this one, in the TV business a little bit longer. So Mac, I don't want you thinking that this is a great buy. But what you can do is you can think, well, maybe it's going to come up here and fill this gap. Maybe at 251. I don't want you to put, if I were trading this one. Now, again, I have millions and millions of dollars in my account. That's not a flex. That's just a point. I would not put more than $500 on this trade. That's me. And so, that's less than 0.1% of my net worth. I would not put a lot of money into something like this. It is not worth it. It is not worth it. So that's my point is, yes, you can make money on this stuff, but you can't make a ton of money by putting your entire net worth into a company that is not profitable. It's not profitable. Okay? That's the problem that you have. Don't think that this is going to be, oh my God, it's a get rich quick scheme. We're running a long marathon, not just a 100-yard dash. If you want to do a 100-yard dash, go ahead and do it. But more than likely, you lose money on those types of things. Jeremy, funny podcast this morning. I didn't listen to the 4-hour algorithm. I sold. I didn't do it. Hey, going into earnings next week, what do you think carries the better prospect, NVIDIA or Dell? Thanks. Well, I don't know. I think my response to Jeremy was, your guess is as good as mine. NVIDIA's. I've been adding to NVIDIA. I haven't added to Dell. Okay, I've been adding to NVIDIA. I haven't added to Dell. So we can take a look at these things. Let's go over here to Seeking Alpha, and we'll type in NVIDIA because we can take a look at the peers, okay? What I want to do is compare this to Dell. It's different businesses, but what you can do is you can compare the valuation and some of the fundamentals of these stocks. So we're going to go NVIDIA, and we're just going to put in Dell. And do Dell. Because I have both, but I have been adding to NVIDIA. I haven't been adding to Dell. So I haven't even looked at this one. So it'll be interesting to see. Now, over 1 year, NVIDIA is up 185%. It's doubled Dell. You can see Dell is a strong buy. NVIDIA in the Quant, it's a hold. Wall Street says it's a strong buy, but it's a hold. When you look at valuation, the only thing that's holding Dell back is the valuation. NVIDIA, same thing. Now, when you look at the trading price versus the 52-week high, Dell is down 38%. NVIDIA is only down 11%. Okay, it's 207. NVIDIA is up 217% against the 52-week low. Dell is up 107%. So weekly volume shares, they're both trading at pretty high share volume. Total return 1 month, Dell is down 18%. NVIDIA is only down 1% over 1 month. 3-month return, NVIDIA is up 31%. Dell is down 25%. 6-month, 70% for NVIDIA. Dell is up 30%. So it's clear that Dell has lost more in the near term and hasn't made as much in the long term. Now, dividend, we don't care about dividends. We don't care about dividends at all. When you look at PE, Dell is at a 14, NVIDIA is at a 45. When you look at the PEG ratio, they're both about the same. Okay? When you look at growth, revenue growth, Dell is losing 7% year over year in revenue growth. NVIDIA is up 208%. Okay? Their EBITDA growth going forward, NVIDIA is expected to grow to 167%. Dell is up 4.6%. Gross profit margin, NVIDIA is at 75%. Dell's at 23%. This is why I'm adding to NVIDIA. I think NVIDIA is a better company than Dell. That's just, revenue per share, 3.23. Dell has 125 per share. So Dell is, per share, you're actually paying less for Dell. But I like NVIDIA. Again, NVIDIA, I can't imagine that NVIDIA is bad here. You got to buy in here at 105. I was buying in at 130. I bought at 120, about this price, 124, way back here. When it triggered at 128, I bought more. Now, if we go and we look at Dell in the 4-hour algorithm, and again, Jeremy, your guess is as good as mine. Nobody knows. What you're using these fundamentals for is just an estimated guess as to when it's good. Now you can look, $92. Now the algorithm makes you 225% on Dell. You make 134% on 24.5 months. You win 73% of the time. That's a pretty good track record. My guess on Dell, you probably get close to this upper portion of 148. I like Dell, but if they are in a competition with SMCI where they're reducing their prices on the servers, and again, if it brings down their margins, they're going to get hit just like SMCI did. Keenan wants me to look at Rocket Labs. Rocket Labs is a growth company that makes no money. Now, I don't want you to think that I'm not a fan of this one. Rocket Labs, let's see. RKLB is the symbol. Rocket Labs is one that I don't want you to think that it's a company that I'm against. I think it's a decent one. They're just not making money. I'd rather trade this one. The 4-hour algorithm makes you 38% versus 11%. They're not making money. Go and look at Finviz. Because if you're asking me about, if you have Seeking Alpha Premium, you can go see the Quant, but go and look at Finviz because Finviz is free. And I think a lot of retail traders don't want to spend money on Seeking Alpha. So use Finviz. Finviz, their income is $176 million loss, okay? Cash on hand, $1. How many shares do they have? 488. So they got a couple of years before they dilute you. They need to start making money. If they're not making money, they have $326 million in sales. They need to start making money. Once they start making money, I'm perfectly fine with putting some money into them. Until then, it's a trade. July 15th, Morgan Stanley downgraded them $8 to $6. Where is it trading? $6.84. Your target price is $7.22. You don't have that much upside before you get there. Now, what are insiders doing? They're all selling. They're all selling at $4.22. The president and CEO sold at $5.62, $20 million worth. What do you think he thinks the company's worth? That was back in 2023. Did he buy more back? He didn't buy more back. I don't see a buy there. Again, you want to take a look at these. I don't think that this is anything more than a trade. Now, Nick writes to me, my dad recently inherited $300,000. He put $200,000 in various safe mutual funds and ETFs. With the remaining $100,000 he wants to invest. He has a great pension and was looking for safe stocks for the long term. I told him what the max 7 are safe bets, especially Google, Amazon, Microsoft. But I told him you can never know where a stock will go down the road. What are some stocks you'd recommend to invest in and grow over time? How would you invest $100,000? So I wrote back to Nick. I said, you hit the nail on the head. Everyone has different risk tolerance. I don't care what you do. And we said this on Friday. The worst thing you can do is give family or friends, stock advice, because if the stock goes down, they're going to hold you responsible. And you don't know what the market's going to do. The greatest stock in history could get taken down. Apple got taken down by 40% over 3 or 4 different times by nothing more than just market conditions. So being in the market is better than the money being out of the market. So my only advice is to get it into the market. I would say put a time frame on it, like something, if you want long term, use a weekly chart. If you want something medium term, use a daily or even the 4-hour algorithm. You can trade around that. What I would do with that $100,000 is I would take $10,000 to $20,000 of that and put it into Bitcoin or Ethereum or some type of life-changing money that will be 20 years from now, hopefully good. You could put it into Rocket Lab. Again, that's if you have $200,000 that's in safety, you're putting 10% of that at $20,000 into something that could turn into $200,000 over the next 5 years. That's what you're trying to do. Again, take a portion of that money and put it into something super risky. But put the majority of that, I think your dad's doing it right. Put the majority of that into something safe, like VOO and QQQ. QQQ is going to be a little bit more volatile. Maybe you can't sleep at night. But again, if he's got a good pension, he doesn't need that money. Just to have it work in there. Let it sit safe. But we all have different risk tolerance. Eric and I were talking about Amazon in the Substack chat. If you don't know, there is a Substack chat where you can chat with me and just look, and you don't have to be a paid customer. I just, some of them are free. But Melly, I was telling him that about Amazon. He said, what do you think of Melly? I think you've got a multi-year resistance level there. And I think it's clear. Look at that. Back in 2021, you hit it. Back in September 2021, you hit it again. You're hitting it now. And so I would go over to Seeking Alpha or to Finviz, whichever one you want. And I would say, okay, let me look at Melly and let me see what the valuation is. Because if it's an extended stock, I don't want to buy it at this one. I don't want to buy it. The valuation is a D. We can go and look at that. The Quant has it as a hold. When you look at Wall Street, let's see what Wall Street says about it. We know that they're going to chase it up. We know that as it goes up, they're going to raise their price target. The price target on Wall Street is 2,091. There are 21 analysts that cover this. 2 of them have it as a hold. The Quant has it as a hold. Let's see how good the Quant was. The Quant history, it's been a hold forever. So it's been a hold. And the main factor, the reason it's a hold is the valuation. And you can see the PE is 61. The PE going forward is 55. The PEG ratio is at 2. At 2. You know, you can look at your peers. And what I'm going to do, if Amazon isn't here, I'm going to pull in Amazon. Because this is why I buy Amazon and not this. We're going to just look at Mercado Libre and Amazon. I just don't like I would rather put my money in America. And that there's nothing other than that. Do I think that Melly could be a huge winner? Yeah, it could be. But I feel way more comfortable putting my money into Amazon. Now, Amazon, significantly larger company, $1.86 trillion market cap, employees 1 million versus Melly has 58,000. You can see the price return over 1 year. Melly's outbeating it. Melly's beating it by double. Do I feel comfortable with it? No, I just don't. You know, you can look at how it's trading against its 52-week high versus 52-week low. Amazon's 12% below their 52-week high. You know, Melly is 1% below its 52-week high. So I think Amazon has a little bit more room. When you look at the valuation, PE, Amazon's cheaper. Amazon's at 37. Melly's at 55. When you look at the growth, that's where Melly's getting the benefit. 37% year over year. Amazon's at 12%. When you're a $1.8 trillion company, it is impressive to grow at 12% in revenue year over year. At some point in time, again, this one has come down in value. That's why I like it. Which one do I like more? I'm staying in Amazon. You can buy Melly. Obviously, you're doing something better than I am. I'll just sleep at night. And Eric wrote back, I'll be ready with a stop loss. I'd be interested in your hearing. I also bought a small position. Now I'm just trying to figure out where to get back in, waiting for the dip back to 1,500. Yeah, I mean, that if you want it, that's what it is. Now let's talk about scans. There weren't a lot of scans, and the reason is because last week was so good. We had a couple of energy stocks, Arch, KOLD, PARR, and AMR, which is also, I think, an alpha pick. This one now I wanted to point this one out because it's an upper left to bottom right kind of stock of recent, okay? It is looking like it's gotten stretched. And when you take a look at this, you are down below the MACD. This is a stock that may be looking to pounce. But I don't want to tell you that it's a good one. When you look at the back-tested results, this is where it gets a little interesting. Is your back-tested results 86.6%. On what? 24 trades over 24 months? Your average win, 16%. You've got a gap up here. You already reported earnings, which they gapped down on. So I want you to do your homework on this one, but that's one that just got a pop. Now, another one that got a scan and across a entry in the algorithm, ELF. We talked about this one being fair value at 164. It's trading at 165. The entry to today, 159. Now, is it crazy to think that this one, is the consumer still weak? This one's been on a tear. Now, it's reset its MACD. The MACD is down at the oscillator. The RSI is at 50. So this one could move. If, again, I made the mistake of buying Ulta where I could have doubled my money in ELF. Easily doubled my money. You got PARR, you got Rivian, you got EA Sports. I was on Madden playing the Masters. I was playing soccer. I had a full day yesterday of playing every freaking sport on EA on the Xbox Ultimate Game Pass. I love that freaking thing. In fact, I just bought some rechargeable batteries, so that's what I'll be doing this afternoon. You got Energy, Arch, KOLD, PARR, and AMR. That's it. That's the entire show. Remember, Trendspider sale is going on. It's only lasting for another 14 hours. If you're listening to this and you like the Trendspider charts, get it. $52 a month for this enhanced. That's a crazy price. It's less than the standard. And you got 6 months for free on the standard. This one, you're getting 6 months for free plus 47% off. That is a crazy good price. This is the tier that I always had when I was a paying customer, the enhanced. And the reason is this one, 3 active windows, 30 simultaneous alerts. It just wasn't enough for me. The 30-day, I didn't want the 30-day max lifetime alert. I wanted it to last for 90 days because sometimes some of the alerts that I set up, they don't trigger within 30 days. So I always had to renew them, blah, blah, blah. I don't use the trading bots. But if you use trading bots, you get 5 only on standard, you get 30 on enhanced. If you don't know technical trading, the advanced, I would urge you, if that's within your budget, to get that one as free, unlimited one-on-one training. When you sign up for this, you go to my link tree and then you go to the email address. Take a picture of your account and send it to me. I will send you back. I just showed you how to import stuff. It's as simple as that. I email you a link. You get to import every tool that I have. Okay, that's it. And then the second link is Seeking Alpha Premium, $25 off, 7-day trial. Alpha Picks, you save $50. Webull, you get free stocks. My newsletter is 100% free. I don't know why you don't sign up. Visible is my cell phone company. I use it personally. It's $25 a month. You save $20 off your first month. AT&T Fiber is what I'm talking to you on. That's a fantastic, fantastic service. I have 1 gigabyte fiber. Savvy Trader. That's all my portfolio stuff. If you want to, you can tip me with Venmo, PayPal, or Cash App. That's it. Take care. Have a great day. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.